Hey traders, welcome back to the weekly Forex Forecast. Non-farm payrolls week is upon us, and it doesn't look like we're going to get a bottom in the dollar just yet. I do favor dollar weakness as one of my favorite setups going into this week. And in today's video, I'm going to show you the exact dollar pairs that I think offer the best opportunities to profit from the Forex markets next week. I do think on balance, we're going to probably get a continuation and a pullback a little bit higher. And probably, especially if we're going to get soft job numbers on Friday, we're going to see another leg down, at least into the prior low in the dollar over the next couple of weeks. We also have a Bank of Canada interest rate decision on Wednesday, and I'm going to show you the interest rate decision setups that I'm going to be looking for in the CAD pairs. And finally, you can see I've added a 30-period moving average. So when we go through the watch list in today's video, it should just help a little bit with the referencing of pullbacks, consolidations, and breakouts that we normally talk about in the weekly Forex Forecast videos. So if we jump over to the market selection, the first thing that jumps out is that dollar weakness. And again, dollar short setting up as one of the best themes heading into this week. So dollar weakness is definitely the number one theme that I like heading into this week. And I'd like to pair the US dollar with the GBP first and foremost, followed by the New Zealand dollar. Now, the third best long idea going into next week really is between the franc and the yen, because everything else is kind of weak. And out of those two, although we've seen a peaking of the performance metrics in the yen, in other words, it's going into a bigger consolidation, I do still favor Japanese yen longs over the Swiss franc long. So pound dollar to the upside, New Zealand dollar to the upside, and also US dollar yen to the downside are three of the top setups I'm going to be looking at trading next week. I also like to the downside the Canadian dollar. We had crude oil closing pretty weak. It tried to make a recovery at the end of the month, but we got a really weak close on the month. And I do think, unless we have some kind of unexpected catalyst, I think now crude oil is probably headed lower over the next few weeks. And that should weigh on the Canadian dollar through the balance of payments. So CAD shorts are the number two theme that I like, again, against the pound, the New Zealand, and the yen. And the third option, we can either look at Aussie or Euro. Out of the two, I prefer Euro shorts because the Euro is kind of neutral, and so is the Aussie, but the Euro is heading this way, whereas the Aussie performance metrics are heading this way. So to summarize then, the setups that I really like are going to be the $3 pairs that I just spoke about. We're going to look at that in today's video. We're also going to be looking at pound CAD to the upside, New Zealand CAD to the upside, and CAD yen to the downside. And I'm going to show you, based on the Bank of Canada interest rate decision coming up on Wednesday, how I'm going to be looking to play those CAD pairs after the interest rate decision comes out. And finally, then I also like Euro pound to the downside, Euro New Zealand to the downside, and we're going to look at Euro yen to the downside. And as always, we'll look at Euro dollar. And on balance, I favor Euro dollar to the upside, as you're going to see in today's video. Okay, so let's kick off the watch list as we always do every single week with crude oil. And the first thing to note is I can either be short or do nothing. I cannot buy crude oil next week. And you can see just by adding a simple 30-period moving average, what it does is just bifurcates, even though it's a lagging indicator, it bifurcates the upper and lower bounds just to give us an idea, just a guide. Are we heading towards the lower bound or are we heading towards the upper bound? It just sits right in the middle. So what you can see here is, and I'm not a massive fan of lagging indicators, but moving averages, they are quite good guides if you want to use them. Everything in Hedge Dash, the levels, it's all designed to be a leading indicator, but moving averages, I don't mind too much. And it does also give a nice point of reference aesthetically when you're looking at this stuff to give you an idea when I say, trading the breakouts or the pullbacks, what exactly I'm talking about. So any pullback in this asset towards its 30-period moving average, you can see we're already below it. So again, just bifurcating the upper and lower bound shows you can look for that kind of bear flag, kind of pulls back, nestles into the moving average, and then sells off. So you can look for this pullback and a sell-off into the 70.63. If you want to know more about the strategy that we're talking about here, that I employ during the week with GMT members, and these exact setups that I'm trading, as well as what the levels mean, just simply click on this link. I've added the strategy video link here for you. You can open it in a new window and you can get all the information, what the levels are, what the setups are, etc. in that video. So the second thing you can look for then as well, if we just blast straight through here, so unlike here, if we start to settle, you can look for that kind of bear flag sell-off. If you break straight through, and you break through with momentum like here and like here. The second thing, as always, I'd be looking for is a breach of the 76.66. Now, if we break through here, we become overbought intra-week in a market that I'm looking to be short. So especially if we trade through here, become overbought and test a prior high, this kind of resistance, this is going to be the area going to be looking for a 1 or 2 day reversal next week in crude oil. And if for whatever reason, and you probably need a catalyst for this to happen, but if it blasts through here, test the second upper bound, we become extremely overbought intra-week. And this would be the third place you can look for a potential short opportunity in crude oil. Now, usually if you break through the first upper bound and you test the second upper bound, usually very often I'll be already short. So I've shorted it, it pushes against me, and I tend to short it again. And as this pulls back, I just look for a cost average. So if you're not involved with an initial short from the blue level, then, you know, the gold levels are very, very good opportunities for 1 or 2 day reversals. But a lot of the time, they're good for just risk managing an initial position that moves against you during the week. And again, all of this stuff I do in real time with GMT members throughout the week. Moving on then to the dollar pairs, starting with pound dollar. You can see this is the #1 ranked Forex pair in the hedge dash system. This is my favorite setup heading into next week. And the other thing is, I'm very pleased to announce a really cool update in the hedge dash system. You can see that we've added quarterly levels and annual levels. So these give you roughly a 70% chance of where these assets should trade on a quarterly basis and also an annual basis. And then of course, a 95% chance when you go out to the second upper and lower bounds. The other thing is we've also added in quarterly and annual candles as well. So you can now look at all this data on monthly, quarterly, and annual time frames as well. So if you drop down to the 4-hour time frame, you can see we've already started to trade below 30 period moving average. So we're kind of reversing on a 4-hour basis. And what that means is what I'd be looking for is I'd be looking for this market to come down, test the 1.3000. And if we breach this level, this is where I'm going to be looking to buy pound dollar on the dip for a 1 or 2 day reversal. If we start to make our way down to the lower bound and instead we start to follow like this and you break back above the moving average, that's your opportunity to look for that breakout. You know, very often like this, it breaks above, kind of settles, or breaks above, kind of pulls back. You can look for that break above and pull back, and there's your bull flag into the 1.32529, and I would think back into the prior high here. And the third thing you look for next week, if it comes down to the 1.300 and it breaks through here, and I'll probably, let's say I'm already long, it breaks through here and tests the 1.2873, this is the second place I can pull the trigger on a long opportunity in pound dollar, whether I'm already involved or not, for a 1 or 2 day reversal to the upside. Next is New Zealand dollar. Now New Zealand dollar is trending to the upside. It's already pulled back and tested its 30 period moving average. So this is an area where you can already start to look for a reversal to the upside intra-week into the 0.63317. If you take out this level next week, it's a good profit taking opportunity for longs, because once you get above here, you only really have a 30% chance of continuing with any significance. So once you breach this to the upside, somewhere above this area is a good profit taking opportunity for longs. The second thing I'll be looking for is if for whatever reason this fails, and let's say we don't consolidate and start to break out, and you can kind of put your trend lines on, you know, usually break out, pull back, retest, and then kind of push higher. Let's say this just breaks straight through. I'm going to be looking for a stair step into the prior high. Below the 0.6167, we become oversold intra-week on a market I'm only looking to be long or do nothing. I cannot sell this asset. So this is where I'll be looking for a 1 or 2 day reversal if we do break below this level. And the third thing, of course, which is more of a plan B most of the time, is if I get involved here especially and it breaks all the way down, and there's a nice high over here as well, another kind of step into prior resistance, so break resistance turning support, as we become, in this case, extremely oversold intra-week. This would be the second place I'd be looking for a 1 or 2 day reversal to the upside in New Zealand dollar. Next is US dollar Japanese yen. I can either be short or do nothing. I cannot buy this market next week. You can see we kind of breached the moving average, we pulled back, and now we're breaking above the 30 period moving average again. And what this is showing you is that we basically have a bigger consolidation. This looks like a low. Here's a high, we kind of failed, and now we're pulling back. It looks like we're probably going to make a C wave. So I'd like to see this market breach the 148.53. We become overbought intra-week in an otherwise weak market. Especially if we become overbought and take out this high, we could look at this as maybe an A, B, and a C. I would be looking at a 1 or 2 day reversal, especially if we take out this high in US dollar yen next week. The second thing you can look for is if you blast through here, maybe I'm already short. Maybe I short this in this area next week in real time and it pushes and takes out the 150.88. Maybe I'm on the wrong side of it. What I'm going to be doing then is I'm going to be looking for a second opportunity to short this. And again, if you're not already involved, this becomes a great initial opportunity. But most of the time I am involved if it takes out this level, and I'll be looking for a 1 or 2 day reversal from here. And of course, the third thing you can look for is we might start to pull back towards the upper bound, but instead what happens is intra-week, you get that kind of reversal where you break back down below the moving average, and then you can look for that bear flag setup into the 143.82 and probably this low as well next week. And the final dollar pair is euro-dollar. Now, euro-dollar is breaking down below its moving average, and it looks like we've already got this momentum to the downside. I would not be surprised to see it take out the lower bound. Why? Because right at the end of the month, we traded into the second monthly upper bound. And very often when that happens, you pull back and you retest the weekly. So what I'd like to see here is I'd be looking for this market to continue down. I can either be a buyer or do nothing. If we breach the 1.09520 and we take out this low, that would be nice. This is going to be an area next week, especially before non-farm payrolls, because the dollar pairs will likely chop around, and then on non-farm payrolls, you tend to get the move. So I'd like to see this come down, breach its lower bound, and I'll be looking for a 1 or 2 day reversal to the upside in this market from below this level. So a market I'm looking to be long overall becomes oversold intra-week. The second thing, of course, is if you breach this and for whatever reason, and you probably need a catalyst, and it's very unlikely you'd do this in non-farm payrolls week before non-farm payrolls itself. So I doubt we'll come and take out these levels in the dollar pairs before Friday. But if for whatever reason, let's say you don't manage to get out of it, you're through non-farm payrolls and it takes out this level here, this is the second place I'd be looking for a 1 or 2 day reversal in euro-dollar next week, whether I'm involved already or not. And the third thing you can look for is if you start to break down and instead of taking out the lower bound, you get that kind of intra-week reversal above the moving average. You can look for a pullback, kind of settle into it, and you can look for that run up into the 1.11420 next week. Moving on to the CAD pairs then, remember we have the Bank of Canada interest rate decision on Wednesday. They're expected to cut rates. We've seen previously they cut rates and we did see some weakness in the CAD. So that's my base case that they're going to cut. We're going to see some weakness in the CAD, but we want to be prepared really to trade it in all outcomes. You know, that's the best thing is to be reactive. Yes, you want to have some kind of predictive plan, but if it doesn't work that way, you want the ability to still try and profit from opportunities reactively. So what we're looking at here is we're looking at pound CAD and we're currently trading below the moving average. So it suggests we've got this kind of weakness, probably going to see this consolidate under the moving average going into next week because these markets tend to do nothing into the lead up to major interest rate decisions. So leading to Wednesday, I don't expect the CAD pairs to do much, but just to kind of chop around and consolidate. Now, if we get a kind of neutral outcome, and we don't really see much happen, and maybe say pound CAD is down here, the interest rate decision takes place, and nothing really happens, well then nothing's really changed. So what I'd be looking for is, I'd be looking for the market to trade into the 1.75820, and below here, this is an asset that becomes oversold intra-week, and I would be looking for a 1 or 2 day reversal to the upside in pound CAD below the 1.75820, and that's on a neutral outcome. So really, you know, nothing really happens on the event. It means there's no catalyst. If there's no catalyst, we're just trading it as normal. The second thing is if we get the rate cut and we start to see a much weaker Canadian dollar straight off of the event itself. In that case, what you can look for is you can look for this market to kind of chop around, move down, and then you get that reversal to the upside. So you get the CAD weakness because of the cut interest rates. And if you get that, you can look for this kind of pullback. Again, you know, look for the market to kind of settle into its moving average, and you can look for that bull flag setup into the 1.7844 and probably the prior high over here. Very much like this, you get the break, kind of settles, and then you get the rally. And the third thing you can look for is if we get, for whatever reason, a bullish Canadian dollar response, maybe they don't cut rates, and this sends the Canadian dollar higher, then, you know, with that kind of a catalyst, you could see it breach the 1.75820. If it goes straight through here, now you might try and already trade that, you know, be on the wrong side of it. But if you're not, if you just kind of wait and you see a bigger sell-off and you manage to get it down below the 1.7451, this would be the second place. I'd be looking for that 1 to 2 day reversal in pound CAD next week. You're only likely to come down here if you end up with some kind of unexpected hawkish catalyst from the BOC. Next is New Zealand CAD. I can either be a buyer or do nothing, regardless of the outcome of the BOC on Wednesday. And what I'd like to see is if this market comes down and does pretty much nothing, let's say it just chops around, especially if it kind of moves under its moving average, you can look for a couple of things. If we start to get a neutral outcome, then you can look, for the market to kind of bounce higher where it is, or better still, to pull back, start to become oversold intra-week, especially if we test this low. There's a high over here and there's a low here. So there's a really nice area, support resistance right in here that you can kind of extrapolate over to here. And if we start to breach this, we become oversold. In this area, I would be looking for a 1 or 2 day reversal to the upside. If we get a kind of bearish outcome, so we get the rate cuts and we see Canadian dollar weakness, that's when you can look for that kind of intra-week breakout. You get the rally, and then you can look for it to pull back, kind of settle, into its moving average, and then you can look for that run up into the 0.85120, and that'd be a good profit taking opportunity for longs. And the final thing is, if we get unexpected strength from the Canadian dollar, it blasts through the lower bound, whether I'm involved with a long position or not, the second place I'd be looking for a buy opportunity is the 0.82710. And the final CAD pair is CAD yen. Now we're already breaking above the moving average, so we're just kind of again bifurcated above this. So we're moving towards the upper bound already. So what I'd like to see is if we start to get this market just consolidating, probably takes out the prior high before the Bank of Canada on Wednesday, and we get a kind of neutral outcome. I'd be looking to trade this just as I would, without the interest rate decision. So we pull back, a really nice stair step, look, into the prior low. We become overbought intra-week above the 109.96. It's a great 1 or 2 day reversal trading opportunity next week. If we get, as is expected, that rate cut and we start to see a bearish outcome, in other words, we see CAD weakness, and we may not even get to the upper bound. Maybe we take out the prior high, we get the Bank of Canada, and then we get the sell-off intra-week. We pull back, we kind of nestle into the moving average. You can look for that bear flag into the 106.718, probably these lows as well. And the final thing, of course, is if we get unexpected Canadian dollar strength, I'm still only looking to be short, but if we blast through here, maybe I'm already short, but if we blast through, the second place above the 111.58 is where I'd be looking for a 1 or 2 day reversal, because at that point we become extremely overbought intra-week in an asset I'm looking to be short. Wrapping up the Forex universe with the Euro pairs before we move on to gold and silver. Starting with Euro Pound, this is my favorite Euro pair heading into next week. And you can see we've already started to pull back towards the moving average. We're trending below it. So this is a market you could see go kind of intra-week without testing its upper bound. So any kind of pullback, very much like over here, and a test, or here and a test of the 30 period moving average, this is where you could start to look for a sell-off into the 0.8362. If you take out this level, it's a great intra-week profit taking opportunity for shorts. If we start to push higher and we turn overbought intra-week, and that would be above the 0.8467, this is where I would personally be looking for that 1 or 2 day reversal to the downside. And if for whatever reason we blast through here, and it's unexpected, but sometimes it happens, especially if you get an unexpected catalyst, the second place I'd be looking for a short is above the 0.85207, whether I'm short already or not for the first upper bound, as we become extremely overbought intra-week above this level. Next is Euro New Zealand. Now this is a really nice setup because we're trending to the downside, and if we pull back and we consolidate into the 30 period moving average, it intersects with the upper bound. So we can pull back, we can breach the 1.7848, and we actually become overbought intra-week in this area as well. So this would be a great place to look for that reversal to the downside, either for 1 or 2 days down, if we test the upper bound and we start to turn overbought and then we start to reverse, or if we pull back, and the moving average could actually work its way down and we just end up trading into it in this area. That's where you could look for that intra-week sell-off into the lower bound at the 1.7505. And the third thing I'd be looking for is if for whatever reason, as unexpected as it is, we blast through here, we take out the 1.8020, we become extremely overbought intra-week. I can either be a seller or do nothing. I can't buy it, and that would be the third place I'd be looking for a potential, in this case, 1 or 2 day reversal to the downside in this asset. And finally, before moving on to gold and silver, we have Euro Yen. Euro Yen has already started to break above its moving average. So again, this looks like just a big consolidation. When you chop above and below the moving average, and the moving average is kind of going down and up and down, it just suggests a bigger consolidation period. So probably, an A, B, and then a C. So I would not be surprised to see this push all the way back up, take out the 16379. If it does that, I'm going to be looking for a 1 or 2 day reversal to the downside from this area. If we blast through here and take out, for whatever reason, the 16610, we become extremely overbought intra-week. This would be the second place I'd be looking for a 1 or 2 day reversal. And finally, if we start to make our way towards the upper bound, but for whatever reason, you start to break back down below the moving average, you can look for that bear flag setup into the 159.18, and that would be a great profit taking opportunity for intra-week shorts next week. Okay, so wrapping up the video, as always, with gold and silver, because of my bearish bias in the US dollar, which of course comes from the hedge dash algorithm, that underperformance telling us we should be allocating into the US dollar on the short side, I do only favor long positions in gold and silver, so I can be long or do nothing, both gold and silver next week. We do also still have real rates coming down, and this is supportive, as is a weaker dollar, of higher gold prices. Now, I did post a video just this week showing how real rates coming down positively affects the gold price, especially with the weaker dollar, and all those things are connected, of course. And so if you haven't seen that already, feel free to go and check it out on the channel. I only posted it this week. And we also, in that video, look at some gold miners for those of you who trade stocks. But all of this combines to suggest further upside in gold over the next couple of weeks. So you can see we're kind of already consolidating. We're chopping around. So what I'd like to see coming into next week, I'd like to see gold pull back because we are below the moving average. And if we start to take out the 2451.02, we become oversold intra-week, especially if we breach this, we turn oversold and maybe test this low. So we turn oversold and then start trading into support. This would be a great area to look for a 1 or 2 day reversal to the upside. If for whatever reason we break through here and come all the way down to the 2398.60, some unexpected catalyst, this would be the second place I'd be looking for a 1 or 2 day reversal to the upside in gold. And finally, of course, you can look for that intra-week breakout. So you look for the moving average come down, and then you start to trade back above it, especially with momentum. And then you can look for the market to come down, kind of settle into the moving average. It won't look like that, it'd be a bit smoother than that, but settle into the moving average. You can look for that bull flag into the 2555.87. And last but not least, we have silver. Now, I've taken the levels off just very temporarily because I want to show you silver on a monthly chart. Look at the close on the monthly time frame. Really nice, strong close back above the prior 2 monthly lows. And this looks like an asset that does have further upside, and I would not be surprised to see this take out the prior monthly high over here. So dropping back down to the 4-hour time frame, putting the levels back on, you can see that this is that big monthly reversal in silver, and we started to break with the head and shoulders. This is a reversal pattern. However, it is kind of counter trend, so I'm only looking to be a buyer or do nothing. I don't see this as something that should necessarily take out the prior low on a monthly basis, because we still have, a weaker dollar, and that should be supportive of silver price. So coming into this week, we're trading below the moving average. I would really like to see this turn over sold intra-week, and this would actually give us a bit of an inverse, a bigger inverse head and shoulder setup. So below the 27.70, this is where I'd be looking for a 1 or 2 day reversal, maybe even a fundamental position, so one you hold for longer, because if we start to rally and we take out this high over the next few weeks, this is potentially a third wave to the upside, and we just looked at that strong monthly close, which is actually supportive of a much bigger breakout. So I will be looking for 1 or 2 days, maybe even I will look to hold this in the GMT members area, see if we can get that fundamental position. I do occasionally hold for bigger moves in these assets for 1 to 3 months, but very rarely the opportunity comes around a handful of times a year, and they're really just short-term trades which we hold on to for longer in an attempt to get more out of it. So that's what I'll be looking at next week. If we blast through for whatever reason, I'd be very surprised, but if we took out the 26.55, I mean, this would really be a failure of this kind of reversal and that strong monthly close. I don't expect it to happen. If it does, I might already be involved. So this would be the area I'd be looking to risk manage that to the upside for a 1 or 2 day bounce. And finally, of course, if we start to make our way down to the 27.70 and instead we start to rally back above the moving average, you can look for price to settle into it. And that's when you get that kind of bull flag set up into the 30.01. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.